Welcome. I have a simple, profitable strategy here to demonstrate and test 100 times in a row. So I'll show you guys all those results. This is a basic momentum shift with structure break with a designated stop loss, take profit target that is very mechanical and easy to follow. So something that will be really good for newer traders if you want something that's just entirely rigid in all its rules. And I've already tested it. It did really well, so I want to show it to you guys. I think there's a lot of room for improvement as well because I just did a super basic test with a static 1-to-1 risk to reward ratio. Let's get into explaining the basic strategy and what I'm actually going to be testing. But before getting into all that, quick shout out to my affiliates. If you want to trade crypto, Forex, indices, commodities, you can do that all on this exchange, BingX. Check out my affiliate in the description down below. And then exclusively crypto exchange, Bybit. So Bybit and BingX, both exchanges that I've been affiliated with for a while. We used both of them for quite some time and both have good competitive fees. So check them out if you're interested in an exchange. Now let's explain this strategy. So this is going to be using a market structure indicator that is a Trade Pro market structure indicator. I'm also using a momentum indicator, but you can use MACD or some free indicator that is showing the momentum. So they're all pretty much the same. Essentially what I'm looking for is a higher low cross up below the zero line. So it will look like this. We get this cross up, and then followed by another cross up below the zero line, but it's a higher low compared to the last cross up below the zero line here. So once we get this higher low cross up on momentum below the zero line, then I look for a structure break to the upside. So what is that going to look like? Here's our cross up on this candle. And then we want to see that this break structure to the upside. And so we have the most recent swing high right here marked by this little green arrow. And this is a candle that takes it out. Essentially, that will just be a market buy at this point. So it will look like this. Entry on structure break. Stop loss will go to the nearest swing low. And so a swing low is formed when there's a higher low candle on one side, a lower low candle in the middle, and then another higher low candle on the right side of that lower low candle in the center. So that's a swing low. And then a swing high is just the opposite, where we have a lower high on the left, the higher high on the middle, and then a lower high candle on the right. So that's what forms a swing high or a swing low. This indicator just puts it on the chart automatically, so I don't need to think about it at all when testing this strategy or looking for setups. So you can do it without the indicator, just so you know how to do it. So the stop loss is going to be to that nearest swing low, the most recent one that's already formed, and then it's going to be a 1-to-1 risk to reward ratio for this test. So while there may be better risk to reward ratios to be used, what I'm testing is 1-to-1. It might be worth testing 1-to-1.5, 1-to-2, or some sort of break-even stop loss method. But for this specific video, I will be testing 1-to-1 risk to reward ratio, and that is the setup. So we have the higher low cross up below the zero line with the momentum indicator, and then we have the structure break where the entry is on that break, or if the cross up happened and it already broke the structure, the entry needs to be on a pullback to that break of structure. Do not want to be having a worse entry than that exact structure break point. Okay, so let's look at another setup, the last higher low below the zero line. So we come down, we're looking for a higher low cross up, which happens right here. So let's see where that occurs. That's on this green candle. So in this case, we already broke structure bullishly with this green candle. So we're going to be entering actually on the close of it because it does come back down and we already came back to that structure break level. So in this situation, this is what it would look like. Here's the structure break with the cross up, the higher low cross up below the zero line on our momentum. And then, of course, we need to wait for the candle close that causes the higher low cross up before actually having a valid signal. And so that would be the entry is the close because it's still at or below where the structure break occurred. And then our stop loss to the nearest formed higher low or swing low right here. So we have the higher low on the left, lower low in the middle, and then the higher low candle on the right. That's a swing low. Okay, this is a 15-minute time frame, by the way. So 1-to-1 risk to reward ratio, and that is the setup there. Okay, so that is exactly what it's going to be. It's only going to be long positions. I'm going to test it 100 times on the historical data, see what the results are. I'll show all of those results in just a sec after fast forwarding through the 100 tests. All right, here are the results after the 100 backtested trades. So let's cover it. This was tested 100 times using a 1-to-1 risk to reward ratio on a 15-minute time frame of Bitcoin against US dollar. And it took about 2 months of price data to find those 100 trades. Out of those 100, there were 69 winning trades, 31 losing trades. So 69% win rate with a 1-to-1 is very good. We'll put it on the strategy ranking spreadsheet to compare it to other 1-to-1 tests that I've done in the past. The most wins in a row was 10. Most losses in a row was 3. So gain on the account figure if risking 1% per trade, also not compounding, 38%. So this one does quite well. And I think it's a great strategy to kind of be the base of something more that could be tested, something additional could be added to the strategy, or using a different risk to reward ratio, maybe a stop loss to break even method. I think this is very promising and something that would be good to get started with, especially for a newer trader who doesn't really know what they're doing yet, something to practice with, something to test out. This one's pretty good. It's simple, easy to follow. So let's get to the strategy ranking spreadsheet, see how it stacks up against others. All right, here it is on the strategy ranking spreadsheet, and it just turns out to be the most profitable 1-to-1 risk to reward ratio strategy test that I've done out of every single strategy here. So we'll look at some other ones to see what's the second best and so on. But this is number 35 out of 101 strategies that I have tested on here. So normally 1-to-1 risk to reward ratio strategies just can't stack up against the gain on account figures for 1-to-2 or better risk to reward ratios like all the top spot holders. This one actually surprisingly falls very high on the strategy ranking spreadsheet, even though it's a 1-to-1 risk to reward ratio. Now let's take a look at the next best 1-to-1 with just a strict 1-to-1, no variability. Here it is right here. That was a 66% win rate, 32% gain on the account. We can look down a bit farther. And then these 1-to-1s kind of really drop off. 63% win rate down here at spot number 63. Then we have another one here, spot number 71, 62% win rate. Another one, 62. 1-to-1 here, 61%. So it seems like these 1-to-1 risk to reward ratios fall around that. So 59% win rate, 61%, 62%, but 69% win rate for a 1-to-1 is really high. It's the highest that I've tested, at least that I can see if I'm not missing anything. So it's very promising. Yeah, so this is the best 1-to-1 risk to reward ratio strategy that I have tested out of all 101 strategies tested on this ranking spreadsheet. So something to definitely look into and practice and modify, make it better. So it'll be interesting to see if I did a different risk to reward ratio, and perhaps I'll do that in a few days. So thank you guys for watching, and have a great day.